Hi everyone, this is Connie with Azrealtorconnie, and I am a realtor located in the Phoenix metropolitan area. And in this video, I'm going to go over ratios an investor should know when getting into investment. So if you're planning to be an investor, have rental properties, or just buy something to sell it, to improve on it and then sell it, it's key that you understand your ratios. This is above and beyond any realtor's advice. I just like to give additional advice so I can mold you, encourage you, and mentor you into that real estate mogul that you've always dreamed about. So this is information that I just give off the fly. It's not scripted, so you will hear me stumble on words on other videos that I do, but this is all just on top of my head knowledge. But I did take some notes for this one, so I am going to put my glasses on because I don't want to miss some of the ratios and the explanations. But I'm not going to get in depth of the explanations because not everyone is excited about finance and numbers as I am. I've realized that. So, put my glasses on. Sorry, one-handed. So there's 5 main ratios. So the first one is the capitalization ratio, and that's usually called the cap rate. That will tell you by understanding the operating income divided by the sales or the income. So the operating income divided by the sales price is the cap rate. So usually investors like to have something above 6, and between 6 and 11 is ideal. So it's based on how aggressive you want to be. So a lot of times investors go in and buy properties and they do a lot of their own work, their own repairs, because this allows them to save and have more of a cap rate in their finances, because it's rent minus expenses divided by what you paid for the property. A lot of times when you're analyzing this number, it's usually analyzed with someone who's paid cash, because you'll use another couple of ratios if you're using financing. But this is just a good summary or analysis tool ratio that allows you to see if this property has a potential to earn you a rate of return. Then there's return on investments, and this is the sale price minus the cost. So what it cost you to buy, and then divided by what it cost you to buy. So of course you're going to buy it at a lower rate, and you're going to fix it up, and you're going to sell it for a higher amount. So the difference between what you paid for it and what you're selling for divided by what you paid for it. Then there's cash return on investments. This is the money, the cost minus mortgage divided by cost. So this tells you how much money you're making between the difference of your mortgage payment. So if you're not buying with hard money, and that's called cash, people say hard money when you're buying with cash, and you're using a mortgage to start your first investments, it's not something that I'm discouraging you to do, because the first step of becoming an investor is taking that leap into doing whatever you have to do. If you have to finance it and you have a profitable ratios, then why not? You go ahead and take this investment and start your investment portfolio. Then there's debt on servicing ratio. So this is your monthly mortgage divided by the net operating income. So again, that's another ratio looking at how much mortgage based on your income. So that's not subtracting the cost again like the other one. Then there's the gross rent multiplier. That's very similar to the cap rate, and this one is analyzing the your cost associated divided by the rental income. So people will use a cap rate or gross rent multiplier if they're going to use this property investment as a rental property. The other ones are analyzing how much money you're making. So if you want to be an investor, you have to understand numbers, because if you get into something it may seem like a good deal, but it's really not, because you know the way things are set up, how much you can get on a rent, how much you invested. You might end up have invested too much in improvements into the home, where then at the bottom line you're not really making income. But I have met investors who did lose initially. They had their money to play with to lose initially, because they knew the economy was strong, and that eventually they would have a profitable rate of return. So they bought at the current rates. They knew the rent wasn't that much different than the mortgage, and over time, using their own money, taking that high risk, they started investing into rental properties. If you like more information on this, I hope I didn't bore you to death, but this is key information on understanding investments and understanding ratios and becoming that real estate mogul you've always dreamed about. So I look forward to meeting you. Again, this is information above and beyond most realtors give you, but I just like to mold you, mentor you, and show you other things you need to know besides just using a realtor saying, I want to buy this investment property. So I wish you the best of luck. I look forward to meeting you. Have a great day. Thank you for watching this video. Please subscribe and share my videos. I have a couple other videos series on investments, understanding your credit, improving your credit, things like that. So follow me, take a look. I hope you enjoy. Have a great day.